Many of you know me as Arcyrus, but in my day job, I'm the Deputy Secretary of State for Wyoming. My office charters corporations, and that includes the SPDI, or the Special Purpose Depository Institution, which, if you know, is what Custodia is, and Kraken has one as well. That's along with the banking division in the state. So when I talk about the Federal Reserve blocking state charters, this is actually a fight playing out in my backyard. The Fed has spent years playing games with the state banking authority, hiding behind discretion, running out the clock, treating state innovation as something that is subject to a quiet federal veto. And for a long time, that worked. Then over the last 15 months, things have slowly changed. And the Bitcoin landscape is becoming a lot more easy for things to happen. However, Custodia is still having to fight. So I'm going to go into what's going on in the Custodia case and what that means for Bitcoin. And then we're going to talk about two other things. Well, so first, Custodia is the first Wyoming SPDI. It's a fully reserved, non-fractionally, no fractional banking, no lending. It is not regulated by the FDIC at all. And it was designed so that the Federal Reserve really had no legitimate objections that they could wield against it. But they're still denying Custodia a master account, which is the intersection of how a bank connects with the traditional finance system. The application was filed in October of 2020, and they've sat on it for years. An application that normally is granted within a couple of weeks. They sat on it for years. Custodia then sued and lost in district court. The legal theory that Custodia used is that under the law, which says the Fed services shall be available to depository institutions. Now, Custodia is clearly a depository institution. They satisfy all the requirements of a depository institution. The Fed did not reject them for ineligibility. They admitted that Custodia is eligible for the account. They denied them because they didn't like it. So Custodia's argument is, you can't deny us for that reason. You must grant us the account because we're eligible. Shall be available means shall, right? So, unfortunately, the district court and the appellate court disagreed. So that's old news. That all happened. The appellate court came down on October 31st, 17 years to the day after the white paper. So Custodia then filed for what's called en banc review, which is, a normal appeal panel is 3 judges. We need all of y'all to come and fix this. That's very, very difficult in the 10th Circuit. In fact, the hardest court to get that en banc review. We thought it was going to be a fairly reasonable likelihood, actually, for a couple of different reasons. However, for what appears to be very political reasons, the court denied Custodia en banc review, which was very interesting because the case that Custodia was using to say you must give us this was a 10th Circuit case called Fourth Corner, written by Judge Baccarat for a pot bank. A bank that was denied a federal master account because they were banking what is a federally illegal business. Bitcoin, crypto, not illegal. However, Judge Baccarat and one of the other authors of that decision said, well, they didn't say anything because there's no written record, but voted to deny Custodia en banc review. So now it is legal in the 10th Circuit to bank a illegal business, but it is not legal to bank a legal business. So that's fun. Well, where do you think it's going to go? Well, this is perfect for the Supreme Court. We'll find out if Custodia decides to appeal to the Supreme Court. Their deadline is June 11th. So on June 11th, before June 11th, we'll find out if Custodia is going to appeal to the Supreme Court. And this is a very good case for that because you have what is basically her case, but there's also this other component, which is the appointments clause. Now, Custodia can't raise this objection to the Federal Reserve directly, But if you know the landscape of the non-Bitcoin landscape, the TradFi landscape of the Federal Reserve, you've got this whole argument between the Trump administration and the Federal Reserve. It played out with a couple of the Fed governors, specifically Cook. He was trying to get rid of the Fed governors that he didn't like so that he could put in his own people. Well, the appointments clause argument that Custodia and the judges in Custodia's, the dissent in Custodia's cases, Judge Timkovich, have pointed out the Supreme Court will have to address the appointments clause issue, and that gives Trump, if assuming they decide that the appointments clause is a problem, all of the Federal Reserve governors are now unconstitutional, and the sitting president would have to reappoint them all. So that's an interesting potential problem for the Fed. We'll see how that plays out. I'm really, really excited to see that one. But in the meantime, the Fed has done a couple of interesting things, probably to say, oh, well, we're not against innovation. They've created this thing called a skinny master account, and they've given it to Kraken.
BitBlockBoom started because we were outsiders, and we needed a place that felt like home. Stockyards were always a place for people who didn't fit in. Let's go take a look at the cow town. Put on your hat. Let's go. Stockyards weren't just a cattle town. It was a place for cattlemen, traders, outlaws, and gamblers, people that were building something new. And that sounded familiar. Butch Cassidy and the Sundance Kid were known to spend time here, and Bonnie and Clyde stayed right here at the Stockyard Hotel. Hotels were great, but they're too normal, and Bitcoin is anything but normal. So we moved BitBlockBoom to a place with some edge and some history. They still run Longhorn Steer down this street every day, just like they did 100 years ago. And BitBlockBoom, well, it's just a few steps away. This is Mule Alley. This is where relationships are made. Bars, restaurants, rodeos, hangouts. Mule Alley is the place to come when the BitBlockBoom day is done. BitBlockBoom was built for people who didn't have a home, and the same thing applies to the stockyards. Seems like we finally found a home. See you at the stockyards.
The skinny master account is, well, just wires. No checks, no ACH, no custody at the Fed, which is actually what you need to have a bank. So it's effectively a payment processing, but only wire processing. So for Kraken, that's fine. They don't really need to have their deposits at the Fed. They have a correspondent bank. That's how these things generally work. Custodia needs the deposit aspect of that. So the skinny master account likely won't work for them. This is really just the Fed trying to say, hey, we're doing something. We gave you a master account, even if it's not really a master account. So they are doing everything they can to prevent our industry from having direct access to the financial system. And they're doing it specifically going after state charters. One of the interesting things that came out in this case, and this kind of leads into what happened this week in Wyoming, is the judges basically, the decisions, if you read them fully, give the Federal Reserve unreviewable discretion. So if you are denied a master account for any reason, including as it came out during oral argument, if you are a member of a protected class, such as an African American, and the Fed decides to not give you an account because you're black, no judge is allowed to question that. Seems a little odd for the 10th Circuit and Colorado judges to say, yeah, we're going to give you unreviewable discretion because we want to. We don't like what that bank guy is doing, so we're going to give them unreviewable discretion. But they actually could use that. I mean, that's a flippant example, but they could actually use that to say, we don't like any state banks. No state banks get charters anymore or get master accounts anymore. They could do that. That's basically what they've done to the Wyoming SPDI. They gave Kraken this skinny account. Oh, by the way, it expires after a year. So we'll see how that goes. We gave it to you. We'll wait until the elections happened, and then we'll pull it back. But they actually can use this to effectively freeze out the entire state banking industry, and there's no judicial oversight whatsoever. Well, last week, the Office of the Comptroller of the Currency, the OCC, the director of that, the Comptroller General, was in Wyoming talking about this very issue and saying how the OCC is going to use its independent chartering authority to attempt to get around what the Fed and the FDIC are doing and prevent the Fed and the FDIC from going after state chartered banks. Mentioned very favorably what states like Wyoming, New Hampshire, and others are doing for the banking industry at this lower level, and hoping that the state can work directly with the OCC to get around the Fed. Pretty interesting when you have the director of one of the three primary banking regulators coming out and saying all that. So leading into the last little thing, since just as a bigger, broader aspect, you see that things like Caitlin, things like the banking industry, and actually what happened a couple weeks ago with mortgages, where the Fannie and Freddie have worked to create a Bitcoin-backed mortgage product. It's not a first, but it's a second, but it's still, we're getting there, right? We're getting there. It's all of these things are showing how Bitcoin is becoming more regular, more regulated. Regulation isn't necessarily a bad word. I mean, yeah, it means control. It means that things that we don't like will happen. But the word regulate comes from the Latin regula, which means regular. So if something is regulated, it means it's regular or normal. Once something is normal, then it's out there. We don't have to worry as much anymore. So yes, regulations do mean that things are not going to happen the way we want. Things are maybe privacy will get pulled back here and there. Maybe there'll be some things here and there. But it also means that we're inside the system, and the system doesn't generally cannibalize a piece of itself. So regulation at its core is actually good, and that means that we're winning or have won. So I know I was going to give some time back for them, so I will be done here. I've skipped a little bit, but I'm happy to take questions on the side. So thank you very much.